Shut this in there.
Oh, what's this?
Okay, Finley, I'm going to ask you one time out in my chair.
No.
So make me start counting.
Okay.
1, 2,
Move!
3. Thank you, Michael.
You're welcome.
Okay, what do we have here?
It's that time of year again.
From the IRS to Mr. and Mrs. McStudmuffin.
What is it, Pa?
Well, let me take a gander. It is a Form 1040.
Well, what's a Form 1040?
Well, a Form 1040 is...
A Form 1040 is a federal income tax return where you can figure out whether or not you owe taxes or if you pay too much and you get a refund.
And that's what it is.
Got it.
So how do you fill one of those out?
Well, first you put your name and your spouse's name, and then you put each of your social security numbers, but make sure you don't give that out to strangers. Put your address, where you live. Then you go on to filing status. Now, your mother and I would be married filing jointly, but we can also do married filing separately, but we don't want to deal with the headache, so we just do jointly. But there are other ones like single, head of household, and qualifying widow or widower. Then you go to exemptions. Now, exemptions would be...
Exemptions are money you can get off of your taxable income. For example, since they're married filing jointly, the McStudmuffins receive an exemption for Mr. McStudmuffin, Mrs. McStudmuffin, Pepe, Finley, and Jamichael. That's 5 tax exemptions for the McStudmuffin family.
And those are the exemptions. And then we totals up, which would be 5 for us. Put them there. And then we go to income. Now, income would be like...
Income is the way the McStudmuffins earn their money. Mrs. McStudmuffin is a 5th grade elementary teacher, whereas Mr. McStudmuffin happens to be the most highly paid quarterback in NFL history.
And then we total those up. And that would be our wages. And then we go on, and then we keep going, and keep going. And then we go to alimony received, which could also be income. Or we could even do like farm income, which would be like our...
The McStudmuffins gain money from a piece of farmland they owe in Montana where they ranch, about 60 acres.
And then we get that money, that'd also be income.
Yeah.
So which we'd add those all together, and that would be our total income. And then we move on to adjusted gross income. Now, adjusted gross income would be like...
Adjusted gross income are things that you can take that reduce your taxes. For example, Mrs. McStudmuffin receives about $250 for her educator expense, whereas the McStudmuffin family received $3,000 for recently moving from Denver to Miami.
And then we add those together and we subtract it from our income, which is on the top. You all right over there?
Yeah.
Okay. And that would be our adjusted gross income. And now we go into the back page. Now the back page would be tax and credits. And then we put our adjusted gross income from the previous page up top, so that way we have it right there for us. And then we move on to itemized deductions. Now itemized deductions can be...
Itemized deductions are deductions that you take where you go through and you list all the things that you could receive money off of.
Or we could even do standard deduction, which is...
Standard deduction for a married filing jointly family, such as this, would be $12,200.
And that would be our standard deduction. So then we subtract that, the deduction from our adjusted gross income on top. And then we move on to exemptions. Now, exemptions would be
Exemptions are things that you can take where you receive money off your taxable income. For example, each exemption in the McStudmuffin family gives them $3,900 off of their taxes. That's 5 exemptions at $3,900 apiece.
And then we go on to taxable income, and that would be you subtract that exemption from your deductions. From that, when you subtracted your deductions from adjusted gross income, you subtract your taxable income from that other adjusted gross income. And then we move on to tax, which our tax structure is progressive, so that means we tax by the dollar you earn. And then put that there. And then we add your taxes, and then you move on to credits. Now, a credit would be,
Credits are something you take that they take directly off of your tax liability. A credit is by far the most valuable deduction you can receive.
now we don't have any credits this year, but you want credits because they'll give you a lot of money off. Then you add your total credits, and you subtract that from your tax. And then you go on to other taxes where you can have like in the self-employed tax if you're self-employed. But we don't have any other taxes, so we can just skip that section. Then we move on to payments. Now, there are various payments. One would be like,
Federal income tax is tax withheld from your paycheck on a pay-as-you-go system.
and that would be our many payments that we could possibly do. So once you're done with that, you add your payments together, and that would be your total payments. Now, if your total payments is more than your total tax, well, then that's the amount you overpaid and you get a refund. But if it's less, well, then that's the amount you owe. So you want a refund, you definitely want a refund. But, yeah, you definitely want a refund, but you may have to pay. It's just one of those things. And then we come to the final thing, which would be like when we sign our name, put the date, we put our mother and I's occupation, and then we're basically done. But the IRS handles 1040s, but they could also do like, red flags, which is,
A red flag is something the IRS uses to figure out and determine if you are making your money legally or not.
they can audit you. You don't want to be audited because that's a hassle. So that's taxes for you, at least a summary of it. You'll get to know more as you go through high school, don't you worry.
Sounds fun.
Well, I'm gonna go sign this.
Alright, good luck.
I'd better go sign to you guys play checkers or something.
And that, my friends, is how you do your taxes.